Whole life is 20 times more expensive than the same amount of term on the same person.
What Dave is saying is 20 times more expensive. If you look at the cost day one, that might be true. But if you insure your entire life with term insurance, did you know term insurance is the most expensive form of life insurance? Why? Because you have to renew it every 10, 20, or 30 years. If you're going to do a true apples to apples comparison, if you live to the age of 90 and you have term insurance to the age of 90, so there is a death benefit that will go to your beneficiaries, you would have paid more money, higher cost, higher premiums overall in your term insurance policy to keep it to age 90 than had you just started with a whole life policy.
So a 30-year-old buying a $100,000 policy, if, say, for instance, they did that for $5, whole life would be $100. Okay, so where does the extra $95 go above the cost of insurance? Because term is only insurance.
That's right.
It goes into an investment called cash value, which is what he was bringing up. Okay, the investment called cash value, the first 3 years on a whole life policy, your investment growth is zero.
Not true. And you're going to see that right here in this illustration. This is a traditional whole life policy on a 30-year-old. And you'll notice there's a guaranteed column of cash value and death benefit and a non-guaranteed column of cash value and death benefit. The only difference between the two is the dividend. That's it. So when the dividend is paid in year 2 of $179, you see the cash value. So in year 1, there is no cash value in this traditional whole life. Year 2, there's $179 because of the dividend. Year 3, there's $4,224. And what you're going to notice is that the death benefit of $853,000 grows over time. So notice also that the cash value, I'm going to look at a different page here to show you that starting year 11, he would have put $110,000 into the policy. He has $111,000 in cash value, and the death benefit grew to $939,000. If he passes away at the age of 90, the cash value is $3.59 million. The death benefit is $4 million. How much premium would he have put in at that point? $600,000. So $600,000 turns into $3.59 million in cash and a $4 million death benefit. What Dave is saying is only the $800,000 death benefit would have been paid out to his beneficiaries. Not true. If he dies at the age of 90, $4 million would have been paid out to his beneficiaries.